The bull market's over, the bear market's back, and guess what? It's still rigged. Look at this. You trade 10 contracts of each of these bouncing bears, you're getting $17,532 at max gain or $10,906. Wow. But the crazier thing, let's say you just chill out in the morning. You just say, I'm going to come in at 1500. Look at this. 170% in 3 minutes or 100% if you just buy and hold. That's 5 minutes, man. That's 5 minutes. I mean, the one before it, nasty drawdown, but you still got 100%. Crazy. Oh, 100% win rate, 100% trade. Wow. What a day. We're going to start reviewing these from Rig God mode, and that's what's coming next. Let's go. Okay, so first, the open, you don't need to trade it. First hour of the day, always a little bit crazy, super volatile. Do not need to trade. What you want to look at is this tradability notification. This comes into all of our premium members. You can join $20 for 20 days, then $99 a month. And this is telling you, hey, 3 checks, tradability, lock in, follow the price action in either direction, prepare for a possible move beyond 3 strikes. Buy the dip, short the rips, full trade size, alerts may tag, price action perfectly, reasonable to expect 100% on trades. On QQQ, every single one of these things happen. 100% plus, and guess what? If you short the rip, you made a lot of money. The rest of it's SPY, unclear, AMD, X. So basically, when this happens and you see this alert, we want to log into the website. Or you want to check out what is happening. And if you did that, you were able to play it perfectly and make like 400%. All right, so we're looking here at the QQQ. We open right here, 441. This thing just moves down 2 strikes, just like that. 439, what happens? 1, 2, 3, 4 to 2. 4 bears, 2 bulls. Okay? Here's 10 a.m. right here. So you get the tradability notification. You log in, you see this. And what do we see? We're at the 439 strike. And that's a pretty bearish setup, right? Big bears, man. Big scores. Then you get a bear at 10:01:36. So it comes in 10:02. We already made a video about that, posted in the comments. But you're able to take this just a little bit higher, right? And that's exactly what we want. Because if we look at it, strategy guide is going to tell us we want to get it above the strike, out of the money. And you're able to do that here. And then the price just nukes, right? I mean, look at that. You get $1, $2, $3 in 30 minutes. So you're already at 100% plus right here, even if you take this one immediately. You're at 100% plus in 30 minutes. That is an epic trade. And the reason why you're able to pull that off is because tradability notification, you log in, you get the alert, boom. Let's say we don't get an alert here. Let's say this thing doesn't exist. As soon as we see this thing start moving down, because it's high volume, because we got a ton of bears coming in, right? You can take this on this candle, because boom, it works, right? And if we take it here and it doesn't work, we just get out of the trade. We lose it. Like, that's fine, okay? But this comes in. We're keeping the bear bias. It's high volume. We think, hey, we can go beyond 3 strikes. Hey, it starts to come down. Let me hit it. Let me hit it while it's still out of the money. That is how you do it. That is how you use rigged. Now, a bunch of us in the Discord got messed up right here. And why did we get messed up? Because we thought we were going to bounce above 437. This was a good spot. It's a good setup. We want to take it every single time. It won't always work. Today it didn't work. Like this is super bullish. Look at all the green. But you know, if it does not break, you're going to get killed. right? If it does not push through. And when you're in this trade, it needs to be like pushing through, and you need to be like thinking, oh, I should be buying 438 right now, not hoping that we go to 437. If you're hoping, you're going to get killed, especially because this is going against the price action, right? This is going against the down move. Not to mention, we'd rather have this here, right, than up here, because we already moved up $1, right? So that's just something to think about. If you make the mistake, lose the trade, lose it. Lose it with honor, lose it with dignity. Be like a shogun and just and move on. Okay? The rest of this, not great. Even though this made some money, right? 59%, you're taking this super low. PS is minus 1151. And if we scroll down and look at this thing, 1350, it's already telling you, right? Extremely high risk. This trade requires a price to close at a low. Did we close at a low? No. We ramped up $2 in like 30 minutes. It's funny too, because when we talk about the Robinhood close, here's the Robinhood close at 1530. We are below 434. Anyone who bought calls the entire day on Robinhood got absolutely massacred. And then what did they do after massacring those people? Boop. Go right back up. Right back up. When we're looking at this bull especially, love it. But when you're chopping right here, just wait for Robinhood to get out. The Robinhood close, 1530. It's always about inflicting maximum pain. You wanted this thing to bounce. We all wanted this thing to bounce. It didn't bounce. Robinhood gets out. They bounce it. And I mean, this thing at the end, crazy. What's better than that? Not much. Looking at SPY, it's interesting because 10 a.m., volume's low, 98%. But then we see this massive spike up to 134. And then we kind of chop at 508. So the way to think about this is, one, we're not even logged in and looking, right? Because at 10 a.m., tradability notification comes in. We're on the queue. And that was easy, right? It was easy to take those bear bombs. That is what you want. High volume, clean tags. Here, really, we come down, okay? But since volume is at 130%, we expect to go beyond 3 strikes, right? So we don't want any of these bulls here because we're only down 2. We basically open at 510. If these two lines are close together, just use this one, okay? So we're here. We don't want this. Do we want to trade this? Could have. Obviously, this made a lot of money, 176%. But you had to get through hours and hours of chopping at 508. We hit this alert. We actually made some money off of it. 89%. We basically got 89% out of it. We liked it because it's 3 down. Okay, you get 3 down, boom. Straight up, $1. Can't beat that, okay? I mean, you can if it goes all the way back to the blue line, but it did not. Here, continuing throughout the day, 1300, not bad, right? This comes in, and let's look, 1327. Potential to nuke further, nearing the average, difficult. Only enter if you get a good entry on any kind of bounce above the strike price. So when this fires, 1327, 508 put is 25 cents in the money. 25 cents in the money. But if you waited, right, 1327, you waited, you were able to get this at the money, slightly in the money, and then it's just much, much, much more profitable. I mean, this alert still killed it if you're selling down here at 505, right? $238%. End of the day, up 2%. Because why? This massive rally. But still, good trade. This is an awesome trade too, because why? 14.30, you get $2 in 1 hour. Let's look at this one. Right at the strike, 14.31. I mean, 250% in an hour, and then you get nothing at the end of the day. Requires price to close at a low. It's high risk. PS is telling you everything you need to know. Risky, risky, risky. Sometimes will it work? Obviously it did work. Didn't close at a low. Oh well. These are crazy. You have 0% win rates going for 171 or 140%. But really, here, we just need to know, hey, we're never going to take these. Why? I mean, PS, minus 858. It's in red. It's telling you high risk. So it's like if you took all the high risk ones, right? High risk, high risk, high risk. I mean, you won one of them, and then you lost the other three. So that's why strategy is more of just like a basic guideline. Will it always work? No, but in most scenarios, it will. Overall, looking at this, I mean, you're looking at this one here, a little bit above, because continuing the price action move, trend following it down, especially because we've been sitting at 508 for hours and haven't broken above. This one, high risk. You could take it for a small position if you wanted to. And then here, you know, we're definitely not taking these. That's it. That's the day. But really, it comes back to, hey, tradability notification, 10 a.m. 10 a.m. right here. We're taking this bear, okay? We're trying this. We're trying this setup every time we see it. It's okay to lose. It's okay to lose. We lost on it. And then here, you're paying attention at the end of the day. 15:30 Robinhood close. I'm taking the 434 call. Right, you know, right in here, slightly out of the money, small position, 434 right there going up. I mean, that's 400%. Is it that easy? Have to follow the strategy. We're going to be putting more and more of it into built into the application. Already a lot of it's there, but I think we can do more when it comes to, hey, volume, just reminding you, we can go down more than 3. Hey, right here, if we don't get it, get the heck out of the trade. Speaking to ourselves mostly. Thank you all. Have a great evening, day, wherever it may be in the world that you're watching this. If it didn't make sense, that's because Rigged is like a completely custom application that we built, trading system for options, and obviously we copy trade Wall Street and tag their moves pretty cleanly. Oh, funny thing, down here, like one of these is like hundreds of thousands of dollars in buying the 438 put. Like they got crushed. I mean, hopefully they sold it very quickly, but wow, absolutely wow. Have a great evening.